Seeds of Wisdom RV and Economics Updates Sunday morning, October 19, 25. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Good morning. Dinar recaps: shaky peace, U.S. brokered Middle East truce and rising Asian border tensions. Ceasefires signal calm, but deeper geopolitical shifts are underway. Middle East developments: the U.S. has announced what it called peace in the Middle East, after mediating a ceasefire deal between Hamas and Israel, including the release of hostages. However, analysts warn the declaration may be more symbolic than structural, as the core disputes over Gaza's governance, security, and territory remain unresolved. Filled circle ceasefire terms were agreed under international pressure, yet fragile enforcement leaves open the risk of renewed clashes. Filled circle humanitarian access remains limited, with aid groups calling the situation tenuous and conditional. Analysts, The Guardian, Modern Diplomacy, note that Israel's security cabinet remains divided over long-term governance plans for Gaza. Filled circle Modern Diplomacy emphasizes that the truce hangs by a thread, with both sides bracing for possible violations amid high distrust. Regional ripples and reconstruction: peace declarations often trigger financial and geopolitical recalibrations across the region. Reconstruction flows: billions in aid and private capital are being prepared for Gaza and surrounding economies. Filled circle refugee resettlement pressures are likely to shift demographics in Jordan, Lebanon, and Egypt. Filled circle energy and trade corridors could reopen, potentially linking Israel, Egypt, and Gulf economies under new U.S.-backed frameworks. Filled circle defense realignments are expected as Arab states reconsider U.S. and BRICS-led security partnerships. Southeast Asia: a second front of diplomacy at the same time, a border conflict between Thailand and Cambodia has resurfaced, underscoring how fragile peace remains in Asia's emerging power zones. Filled circle ceasefire talks are underway, with U.S. and ASEAN mediators active ahead of the Kuala Lumpur summit. October 26–28, Filled circle strategic implications. Southeast Asia continues to serve as a proxy arena for great power competition between the U.S. and China. Filled circle trade and infrastructure stakes are high, especially with cross-border supply chains and Belt and Road investments in play. Why it matters: filled circle these peace efforts, from the Middle East to Southeast Asia, are not isolated. Filled circle each region reflects a broader financial and geopolitical realignment, driven by shifting alliances and competing global debt strategies. Filled circle what appears as diplomacy is also a restructuring of influence, capital flows, and resource control across multiple continents. Filled circle ceasefires and negotiations are becoming tools of financial recalibration, shaping who finances reconstruction, who builds infrastructure, and who profits from new corridors of trade. Filled circle the current moment marks more than a pause in conflict. It represents a rebalancing of the world's economic architecture, negotiated through the language of peace. U.S.-China trade tensions deepen amid IMF warning and global markets bracing for impact as tariffs and credit risks build. Investors are reassessing global growth and market stability. Global outlook turns cautious. Global finance leaders meeting at the International Monetary Fund, IMF, and World Bank in Washington this week issued a sober warning. Renewed U.S.-China trade frictions, rising sovereign debt, and tightening non-bank credit markets are forming a triple squeeze on the world economy. Filled circle trade tensions are resurfacing as Washington weighs new tariffs and Beijing retaliates with export controls. A dynamic the IMF calls a drag on both growth and confidence. Filled circle high debt levels across emerging and developed markets are compounding the strain, with several countries approaching fiscal limits on public borrowing. Filled circle credit tightening among shadow lenders and private funds adds to systemic stress, signaling liquidity concerns beyond traditional banking. Market jitters and safe haven surge at the same time. Global markets reacted sharply to renewed uncertainty. Filled circle regional U.S. banks reported exposure to deteriorating commercial and private credit, triggering a sell-off in financial shares. Filled circle global stock indices slipped, led by losses in Europe and Asia, while the S&P 500 fell amid heightened risk aversion. Filled circle gold surged to new highs, reflecting investors' move towards safe haven assets. Investors are also bracing for a critical data week ahead, with U.S. inflation, CPI, and key corporate earnings, including Tesla, Netflix, and Intel, expected to shape sentiment. Systemic risks converging according to IMF officials. The intersection of trade pressures, debt overhangs, and credit fragility could transform isolated risks into a broader systemic stress event. Filled Circle global growth forecasts have been downgraded again for 2025. Filled Circle cross-border capital flows are slowing, reducing liquidity across emerging markets. Filled Circle the IMF cautions that what appeared to be regional or sectoral risks are now becoming globally correlated. Implications and outlook. While policymakers aim to stabilize expectations, the underlying trend suggests a realignment of global finance. Filled Circle trade disputes are reshaping supply chains and accelerating the move toward de-dollarized trade blocs. Filled Circle credit markets are exposing structural weaknesses in non-bank financial intermediaries. Filled Circle investors are positioning defensively, signaling that volatility, not stability, may define the coming months. Why it matters when trade wars, debt overhangs, and banking credit strains converge. We're witnessing the architecture of the global financial system being tested in real time. UK's crypto countdown towards stablecoin rules by 2026, making Britain a trusted hub for digital assets. If the rules get done on time, what's happening? The Bank of England, BoE, and UK regulators plan to finalize a regulatory framework for stablecoins by the end of 2026. A public consultation is set to launch on the 10th of November 2025, inviting feedback from the industry, investors, and other stakeholders. The UK intends to align its regime with US stablecoin rules, particularly around what assets must back the coins, e.g., short-term government debt. Why this matters? Stablecoins, crypto assets pegged to things like the US dollar or the British pound, are becoming a major part of digital payments and finance ecosystems. Clear regulation could position the UK as a global leader in the crypto and fintech space, attracting startups, finance firms, and investment. But if regulation is too slow, too bureaucratic, or misaligned, the UK risks losing ground to other jurisdictions such as the US, Singapore, or the EU. The UK's current crypto snapshot. Roughly 7 million UK adults now hold some form of cryptocurrency, up from just 2.2 million in 2021. The Home Revenue and Customs (HMRC) is actively warning investors who may be underreporting crypto gains. Firms in the crypto space have been pushing for clear, fair, and stable rules. Many cite regulatory uncertainty as a barrier to growth. What the new rules are expected to include: defining qualifying stablecoins, e.g., fiat-backed, issued from the UK, and bringing issuers under supervision of the Financial Conduct Authority, FCA, or BoE. Backing assets. Stablecoin issuers will be required to hold secure, liquid assets, e.g., short-term government debt, in trust, separated from other company liabilities. Risk management frameworks. Issuers will need documented policies for liquidity risk, custody, redemption mechanics, and separation of assets. Potential caps or limits. The BoE has floated caps for individual holdings, e.g., around £10,000, £20,000, and for businesses, to mitigate rapid outflows of deposits into stablecoins. Global context and competitive risks. In Europe, the markets in crypto assets, MiCA, regulation becomes fully effective in 2025. The UK wants to stay in step. In the US, stablecoin bills and regulatory moves, e.g., the so-called Genius Act, are pushing clarity and competition. If the UK misses the opportunity, startups and issuers may flock to more crypto-friendly regimes, or those already operational, reducing the UK's fintech edge. What to watch for next: November 10, 2025. The start of the consultation period. Key for industry reaction and watching how open regulators are to feedback. How quickly secondary legislation and FCA, BoE rule makings follow. The devil will be in the detail. Industry adaptation and migration. Will issuers wait for UK rules, or move abroad? Will holding caps or strict rules hinder or help interaction with banks and the traditional finance sector? How will stablecoins fit with deposits, tokenized assets and payments infrastructure in the UK's system? Why it matters if the UK delivers a strong, clear and globally aligned stablecoin regime by 2026, it could become a trusted hub for digital assets, marrying innovation with protection. But the path is narrow, it needs pace, clarity and global coordination. Listen to the full version on the official dinarreport.com website and become our supporter on Patreon. Source: Dinar Recaps.